Good morning, good afternoon, and good evening. Whatever time you're listening to this, please welcome to the Market Color Podcast. This is a weekly podcast that is dedicated to providing our listeners with a broad overview of the global financial markets, including a special focus on the Kenyan markets. And in order to deliver on this objective, we have structured this podcast to begin with an overview of the global markets so as to give you a big picture perspective of the global economy. This is then followed by the Kenyan segment where we review the performance of the domestic markets with a view to covering all the major asset classes. And finally, we wrap up the podcast by addressing the topical issue for that week so as to bring you up to speed with the latest financial headlines. And now to this week's podcast where we're reviewing the performance of the global markets during the 46th week of 2023, and that is from Monday the 13th to Friday the 17th of November. And without further ado, this is your host Jamuhuri, and together, let's dive right in. We kick it off in the United States, where inflation in the month of October was at its lowest level in the past 2 years, providing a signal that price pressures were easing off and giving the Federal Reserve the green light to stop raising interest rates. According to data from the U.S. Labor Department, the Consumer Price Index, which measures a broad basket of commonly used goods and services, this increased by 3.2% on an annual basis and was down from 4.1% in the month of September. Excluding volatile food and energy prices, the core consumer price index increased at a higher rate of 4%, indicating that the prices of other goods and services were rising faster than food and energy prices. Despite inflation being at its lowest level in the past 2 years, it still remains well above the Federal Reserve's target level of 2%, which is why the markets are still closely watching the central bank, even after it opted to hold interest rates steady at its last two policy meetings. And across the Atlantic, the Office for National Statistics revealed on Wednesday that inflation in the United Kingdom had also hit a 2-year low as it fell sharply from 6.7% in September to 4.6% in the month of October. The core consumer price index, which excludes volatile food and energy prices, fell to an annual rate of 5.7% in October, and this was down from 6.1% in September. At its last policy meeting, the Bank of England decided to hold its benchmark interest rate unchanged at 5.25%, and in the process brought to an end a run of 14 consecutive rate hikes as policymakers sought to bring inflation down towards the central bank's target level of 2%. In the U.S. stock market, November has been a great month for stocks as all the three major indices recorded their third consecutive week of gains. This past week, the upward momentum was fueled by U.S. inflation data, which hit a 2-year low and signaled that the Fed's rate hiking cycle may now be over. The Dow Jones Industrial Average ended the day marginally higher at 34,947, whilst the S&P 500 added 0.13% to settle at 4,514, and the Nasdaq Composite crept up by 0.08% to end the session at 14,125. For the week, the Dow advanced by 1.9%, whilst the S&P 500 added 2.2% and the tech-heavy Nasdaq jumped by about 2.4%. And on the back of the red-hot November rally, the Dow has risen by 5.7% for the month, whilst the S&P is up by 7.6%, and the Nasdaq Composite has skyrocketed by an impressive 9.9% in a single month. In the US bond market, yields were down sharply for the week following the release of the Consumer Price Index for October, which came in much lower than expected, indicating that inflation may finally be cooling down and boosting hopes that the Fed was done with hiking interest rates. The yield on the benchmark 10-year Treasury bond hit its lowest level in about 2 months as inflation hit a 2-year low and signaled to investors that the Fed's rate hiking campaign may finally be over. The yield on the 10-year bond briefly traded down at 4.37% before bouncing back to around 4.44%. Whilst the yield on the policy-sensitive 2-year Treasury note also initially dipped before recovering more than 6 basis points to close the session at 4.9%. In the commodity markets, the price of crude oil recovered on Friday after falling about 5% to a 4-month low on Thursday, driven lower by increasing supplies, and this was in tandem with a slowdown in global demand. The decline in oil prices was mainly triggered by a steep increase in U.S. crude inventories, as well as signs of cooling demand from China, which is the world's largest importer of crude oil. On Friday, the price of Brent crude rose by 3.2% to $79.91 a barrel, whilst the price of the U.S. benchmark West Texas Intermediate, this rose by 3% to $75.11 per barrel. Both benchmarks have lost about 16% of their value over the past 4 weeks, and prices were on track for their 4th consecutive week of losses. Meanwhile, Marben oil, which Kenya imports, was steady at $81.87 per barrel compared to $81.59 the previous week. And for your information, the pricing for both oil futures contracts has now flipped to contango, which means that spot prices are now lower than future prices, and this usually indicates a healthy supply of crude oil. The opposite of contango is backwardation, and this is where spot prices are higher than future prices. In the precious metals market, the price of gold registered a massive weekly gain as the US dollar weakened on the back of the lowest inflation rate in the past 2 years, which led to speculation that the Federal Reserve was done with tightening monetary policy. Following the slowing inflation data, the market is now pricing in rate cuts as early as May 2024. The prospect of lower interest rates has put downward pressure on Treasury yields as well as the US dollar, but conversely enhanced the appeal for the non-yielding asset that is gold. And consequently, the price of spot gold was up about 2.3% for the week and closed for trade at $1,980 per ounce. And on that note, we come to the end of this week's podcast. Thank you for listening to the Market Color podcast. I hope that you found it to be useful and informative. And if so, please share it with a friend and help to spread the word around. I really do appreciate your assistance in this effort. And for your information, the Market Color podcast is now available on all the major hosting directories. That is Apple Podcasts, Spotify, Google Podcasts, as well as Amazon Music. Please consider subscribing so that you can be notified every time I publish a new episode. And if you have any ideas or feedback on how we can improve this podcast, please feel free to reach me on the following email address. That is jamuhuri@gmail.com. Jamuhuri spelled Jamuhuri. Once again, thank you for your continued support. I look forward to interacting with you again next week. And in the meantime, please do have yourselves a blessed and fantastic week ahead. And remember, it's not just time that is passing by, it's your life. Think about it. Thank you, and God bless.